The most frequently asked question I get about investing is where should I start? If you're asking yourself the same question, I'm going to answer this in the video coming up. Hey everyone, I'm Chris and welcome back to the channel where we talk about investing, real estate, and saving money to help you guys achieve financial freedom. In this video, I'm going to answer 4 questions. What are index funds and ETFs? What are the 3 types of funds? Why I like investing in index funds and ETFs? And what are my top picks for index funds and ETFs? So the very first question is, what are index funds and ETFs and the difference between the two? A fund is essentially a pool of money that gets invested into a lot of assets like stocks, bonds, securities that track a particular market index. A fund can be an index fund, ETFs, or exchange-traded fund, mutual fund, or managed fund. But in this video, I'm going to concentrate on index funds and ETFs because I think it's a good place to start, especially when you're new to investing. Index funds and ETFs are actually very similar. The biggest difference is that ETFs can be traded like a stock. So you can trade it anytime during stock market hours, whereas an index fund can only be bought and sold at the end of a market day. Whereas the difference between an index fund and a mutual fund is that a mutual fund is actively managed by a fund manager to try and beat the market, whereas an index fund will track and mimic the market. That's why it's better and it performs better as well. So what are the 3 types of funds? First is a market fund. A market fund invests in a broad section of the market, usually across different industries. For example, the Vanguard S&P 500 ETF with the ticker VOO. This ETF invests stocks in the S&P 500 index representing the 500 largest US companies. The second type of fund is sector specific. So it invests only in industry-specific sectors. Like for example, ARK Innovation ETF with the ticker ARKK. It targets companies that are considered disruptive innovation, like for example, AI, DNA technologies, cloud computing, energy innovation, automation, and manufacturing. And the last type of fund is character specific. So it only invests in companies with a specific characteristic. Like for example, Advisor Shares Cannabis ETF with a ticker YOLO. I love that, by the way. So they have 35 holdings that involve the cannabis industry. The next section are the reasons why I like index funds and ETFs. Like I've said before, an index fund will track or mimic the market because statistically, this has performed better compared to a fund manager that will try and beat the market. Index fund make it safer to invest and it can be passively managed. Therefore, there are low costs in owning an index fund. Actually, when Jack Bogle discovered the index fund, that's when people realized that they don't need to spend a huge amount of money on fund managers because they can now do it themselves, making it easier and accessible for people to invest in the stock market. Another reason why I like it is because there are better opportunities for higher returns and there are so many options for diversification. The last section of this video is my top pick of index fund and ETF. I actually already mentioned it in the video, and my favorite index fund for beginner investor is the one that tracks the S&P 500 index with a corresponding ETF VOO. Like I've said before, it tracks the top 500 US companies. The diversification helps me sleep better at night because I know that my investment is safe. And historically, the S&P 500 always recovers after a recession. It survived the dot-com bubble, the global financial crisis, and the thing that happened to all of us last year in 2020. Last year was actually the fastest recovery compared to all the other recessions, and it also survived many more other recessions even before I was born. Because it is a passively managed fund, it only costs 0.03% per year to own, making it a really good long-term investment. If you compare that to a professionally managed fund, it can cost around 2% or more to own. There are actually different versions of the VOO, like Schwab's SWPPX, so definitely do your research, see what's out there, and see what's available for you in your country. If you're thinking about investing and you have the extra cash lying around, do it now because the sooner you invest, the richer you'll become because of compound interest. However, I must also say that the longer you invest, the lower your risk. So definitely definitely only invest money that you don't need in the next 5 to 10 years. And as always, with money decisions, do a lot of research. I'm going to put a lot of terminologies in the description box below. That's your homework. I want you guys to Google these terms and increase your knowledge about investing. Knowledge is free and everything is out there on the internet. The last thing I want from you guys is, what other videos do you want to see next about investing? You might be responsible for the next video. Comment them down below and I'll see you guys next time. Bye!